Hey guys, hope you and the families are doing well. Today's date is September 19th, 2025. This session, we are going to focus on textbook opening range breakouts. I found this a very effective, both in terms of a setup, but also an order entry method technique for when leading stocks. That's your TMLs, your O'Neill, big earnings, big sales, big estimates, new growth area of the market potentially, all your kind of momentum leader type stocks are displaying intraday at relative strength. So what I want to do is take you through some 5-minute opening range breakouts from today just to really help you with the pattern recognition, teach you exactly what I am looking for in terms of the identification, the controlling risk, the risk mitigation side of things, and also optimizing profits. And we can talk about that both from an intraday perspective, but also from a swing trading perspective as well. So PLTR, this one that I took earlier today. So this is 5 hours ahead of New York time where I am in London. So this is 2:35 London time, which would be at 9:35 Eastern time and 30 seconds into it, because obviously it can take a little bit of time that you select that stock and settle that stock. So ideally you get it right on the screws that it's taken out the high, but oftentimes in the real world, okay, you're not going to be able to enter like an absolute robot and get it there as soon as it's going. So I'm going to take you through PLTR, explain the rationale for why I think PLTR was a standout setup right there. But then there's other ones from today as well, okay? Just to show this happens every single day. And a lot of it at the minute, I think this market is absolutely dominated by algorithms. So what I try and do on a day-to-day basis is watch about circa 80 stocks across 4 monitors, and I divide them into groups and themes. And then I'm just trying to look, okay, where are the algos flowing today? Where is the money flowing? What is displaying intraday relative strength? So you can see it today on quantum computing stocks. I'll start then breaking these down, dissecting the chart a little bit. So we're going to look at IONQ, we're going to look at QBT as well. Both those are quantum stocks. I'm going to show you some of the clean alternative energy related stocks. That's going to be OCLO and NNE. I'm then going to take you through precious metal miners from today as well. So this is GDX, the group ETF, the gold miner ETF, and then Newmont, one of the big boys of the group. I'm then going to take you through to South American gold mining stocks, that's GFI and Anglo Gold Ashanti. I'll then take through 2 other precious metal miners, Barrick Gold and Kinross Gold, and then we may go through a little bit of a little bit of bar by bar, but we'll see how we go. So really want to focus this session on opening range breakouts, specifically what to look for. There are 4 parts to every single trade: 1 identify, 2 control, 3 mitigate, 4 optimize, and that is what we are going to be spending our time on, specifically focused on opening range breakouts, which you can then use from just an intraday, a day trade if you want, or from a swing trading perspective as well. Much depends on the market, how it plays out as well. So PLTR, let me just start with this. So this one that I took this morning on the 5-minute ORB. Okay, so one of the things that I'm looking for, if we just start off visually on the candlestick, okay, what I'm looking for is, generally speaking, a widespread candlestick. Okay, I'm looking for the candlestick to open near the low of the bar and close near the high of the bar. Why am I looking for that? Because that is a visual representation of demand, that there's a lot of demand for the stocks. If you take a look at PLTR, effectively, it opens on the low of the bar and closes very close to the high of the bar. Yes, there's a tiny little, what I call a demand out, and yes, there's a tiny little supply sheet. Would it have been even more bullish had it have opened right on the low, push, go, and close up there? Yes, it would have. I can show you an example of that today, actually. Let me show you. Let's go through UMAC, which is here. Okay, this is a 5-minute RB. I'm planning to show you this one, but it's just the same thing, right? You take a look at UMAC today, opens right on the low, and it just pushes and goes. Okay, rhymes, doesn't it? Opens on the low, pushes, goes. So it opens on the low and just immediately go. What does that tell you about the presence of demand? Tells you that the algorithms, traders, market operators were just going in straight off the bat. Okay, it's really good to see. So if you see the open right on the low and then it's closing, would have been even better if it was a strong bar. Like this bar here, absolutely textbook. Open effectively on the low of the bar, goes out on the high of that. But that would be absolutely perfect. And if it's got large relative volume coming through, which you tend to see in the opening 5 minutes anyway, so you don't have to think about it too much. But if you see large relative volume coming through, that can be a really good sign. Or you could see the volume start coming through post the entry. That's another really good sign, as is continued intraday relative strength. So let me go back to PLTR. Okay, so the entry is through the high of this 5-minute candlestick. So visually, in terms of the candlestick, it opens near the low, strong close, nice on around the high of the bar. Okay, now it's even better. We'll come on to the controlling risk. My ADHD brain is going ping, 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 ping like this everywhere. What I then look for, okay, is for the stock to display intraday relative strength versus the applicable major index. So if it's a more tech orientated stock, I'll be giving it greater weight to the triple Qs. If it's more of not a tech stock, I'll be looking more so at the S&P 500, but it doesn't really matter. Okay, look at the Qs, look at the S&P 500. The general point is that I want it to be displaying intraday relative strength. So what is intraday relative strength? Well, if we know visually what a lot of demand looks like, which is this candlestick here that we're looking at with PLTR, same candlestick with UMAC, open near the low, strong close, indicating that there is a lot of demand relative to how much supply is coming to the market. But if we take a look at the triple Qs, what is this first 5-minute candlestick indicating to us? Well, it's indicating more so weakness, isn't it? The opening price is here, it then tries to go, there's this supply shoot, and then a relatively weak close. So this is signaling in the first 5 minutes that supply is a stronger force than demand. Whereas if we look at PLTR, it's indicating that demand is a stronger force than supply. Why? Because price opened here, pushed up, closed up. There must be more demand than supply. Whereas if we were to look at the triple Qs, we'd reach the other conclusion. There must be more supply than demand. Why? Because the candlestick looks like this. It opens here, there's a supply shoot, it tries to rally, gets sold into, and then a relatively weak close. So here is then the kind of kicker, right? Here's the thing to really pay attention to, is the degree of intraday relative strength PLTR here is showing versus the applicable major index being the triple Qs. PLTR looks like that, triple Qs looks like that. So this is then the intraday relative strength point. PLTR is doing this and showing this much strength in the face of the triple Qs doing that. Now, this is then where you build out your mental representations and you realize that when stocks tend to go on big days, and I'll show you QBT next, okay, which is a quantum stock. When stocks tend to go on big days, so this is QBT, okay, which is going on a really big day. Okay, if you think about this move so far relative to the 20-day ADR percentage, okay, so you go from the low up to the high here, the stock has gone up 27.82%. I'm not saying you're going to buy the bottom tick. I'm not saying you're going to buy, I'm not saying you're going to be able to sell the top tick. The point I'm trying to get across here is the stock is now up circa, let's call it 7% and 28% because the math's nice and easy. The stock is currently up, let's say, around 4 times the 20-day ADR percentage. So that would be the equivalent of, let's say, a 3% 20-day ADR percentage stocks going up 12%. That's a really big move. Could be the same as a 5% 20-day ADR percentage stocks going up 20%. That's a huge move. So what you're then really trying to do is internalize with your mental representations. When stocks go on huge moves for that session, for that day, what do they do visually? What do they look like? What are the repeatable characteristics that you spot? And I'll go back to PLTR in a second, but just look. See how the opening price is the low of that 5-minute bar? You can see it on the daily chart. The opening price is the low of the bar. Push, go. See that? What's that telling you about the immediate presence of demand? It's immediate. Answered my question, I didn't. Opens on the low, push, go, strong close. Look at UMAC. UMAC's got an ADR of nearly 8%. It's been up on the day. Let's just keep the figures nice and round. Nearly 2 times the 20-day ADR percentage. So the stock has moved effectively 2 times its 20-day ADR percentage. But what did it do on that day? If we were to go back to QUBT, well, what did it do when it goes up 4 times its 20-day ADR? What do you see that keeps happening? That's why I'm really trying to get across in there. What do you tend to see that keeps happening when stocks go on big moves? And it's the same thing. Supply and demand is supply and demand. It doesn't matter if it's QUBT, which is a quantum stock, or something completely different, being UMAC, which is a drone stock. Supply and demand is supply and demand. Buying and selling is buying and selling. It's absolutely timeless. So then what you're really trying to do, if you want to then take it to another level, I think, is you're trying to then watch these stocks, understand, 1, what are the TMOs and momentum leaders? 2, when do they display very impressive intraday relative strength? So I'll then start breaking them down even more in a minute, okay? But with PLTR, it's doing this in the face of the triple Qs. So I'm giving that a lot of weight. Okay, a lot of weight. The PLTR is able to do that. On the second 5-minute candlestick, the triple Qs actually makes a new session low, whereas PLTR is just powering through new high of day. Opens effectively on the low of that bar, closes effectively on the high of that bar. Okay. And we'll then continue to talk about intraday relative strength as the trade plays out. So visually, in terms of the identification, hopefully we've ticked that box. Everyone knows, right? That is a nice looking candlestick. The next part of a trade, and if you are a scalper, a day trader, a swing trader, a position trader, there are only 4 parts of a trade. 1 is the identification, 2 is the controlling risk, 3 is the risk mitigation, 4 is the optimization of profits. Now, you can do those well, or you can do those poorly. The choice is yours. And if it is, let's say, a day trader who's been trading for a week, they may not even know there's 4 parts to a trade, but they are doing the 4 parts of a trade. They are somehow going to have an identification. They are somehow going to control risk or not control risk. They are somehow going to mitigate risk or not mitigate risk. And they are somehow going to optimize profits. They may do it very, very poorly because they don't even know what it is they are doing, right? So there is a skill level, a skill component to each of those. So that's the identification. We then want to think about the controlling risk. So for me, I like using this 20-day ADR percentage as an initial risk metric. We tend to find with the better opening range breakouts, yeah, it can be. It's the same kind of principle for Immorellos, for buy stop limit orders with trigger bars, shakeout demand tails, gap down reverse bars. Obviously, shakeout demand tail and a gap down reverse bar. Inherently, it's a wider bar relative to a trigger bar, which is often a tight low volume inside bar around one or more key daily moving average. So, for instance, this here is a trigger bar. So, if you were trying to target this with a buy stop limit order through the high, stop underneath the low, it would inherently be a tighter risk control, initial risk control versus say shakeout demand tail. Now, it never moves through the high this bar here, so a buy stop limit order wouldn't fill. But you can see the difference. This would be a trigger bar, this would be a shakeout tomato. So shakeout tomato with a buy stop limit order, through the high, stop loss underneath the low there. Okay. And so in terms of the controlling risk, I like to use a 20-day average daily range percentage. Okay, engage risk against that. Oftentimes the better opening range breakouts will be somewhere between a quarter and a half relative to the 20-day ADR percentage. Quarter and a half for 5-minute opening range breakouts like this. Okay. So if we were to put this on here, so through the high, stop loss underneath the low, the initial risk here is 1.3%. The 20-day ADR percentage is 4.28%. So what's that? Around about a third, less than a third. So it's in that nice sweet spot, okay, of a quarter to a half. Quarter to a half, okay? So it's in that nice sweet spot, plus it's what we were just talking about in terms of the identification of intraday relative strength as well, and visually what to look for with a 5-minute opening range breakout candlestick. So not only is PLTR doing this relative to this, it's also an initial stop loss of circa 1.3% off an ADR of 4.25%, around about a third. See how we're checking the boxes now. With more kind of time and more kind of practice at it, you'll get better at it. You'll get quicker at it. Okay. So then, yeah, I'll bring you in a little bit, Thomas. So then here, it's about how quickly can you do this and how many stocks can you look at. If you're only looking at 8 stocks, okay, if you've got one screen and you're looking at what you deem as say 8 leaders, and I'm looking at 80, I have 10 times more opportunity than you. I can see 10 times more potential opportunity than you. And you may say, well, that's unfair. And I would say, well, get more monitors, watch more stocks. Okay, the more stocks that you can watch, the more information that you can assimilate, the more opportunity I think you have of being able to see in real time PLTR, IONQ, QBT, NNE, OCLO, these are all from today, GDX, Newmont, Goldfields, Anglo Gold, Kinross Gold, Barrick Gold, SMR, QBTS, SoFi, loads of them today. So the more you can watch, the more you can assimilate, the more you'll train the pattern recognition to quickly be able to identify this. Okay, so we're thinking about the identification. Check. We're thinking about the controlling risk. Now, the controlling risk feeds in to the risk mitigation, which is the third part of the trade. Okay, so for the risk mitigation, if you are targeting a stock, and let's say the initial stop loss is not 1.3%, it's 4.25%. Okay, that means the stock has to go up its 20-day ADR percentage. Well, actually more than its 20-day ADR percentage. Remember, you're buying through the high. Okay, so the stock then has to go up over its 20-day ADR percentage for you to get to 1 times risk. So this is the point that if you are buying and your initial stop loss is a quarter, a third, a half relative to the 20-day ADR percentage, you're improving the chances that on that day, so then you're taking away gap risk as well. If you haven't pre-rolled, you then get more gap risk. Okay. You're then improving the probabilities that the stock will be able to reach a multiple of your initial stop loss on that session. Okay, so it's plausible today that PLTR may be able to go up 4.28%. So then, given my entry here, because the initial entry and the initial risk is tight relative to the 20-day ADR percentage, well, the range of PLTR, if we go from here to here, PLTR from the low to here goes up 2.93%. That's very reasonable based on the 20-day ADR percentage. Now, it's probably not reasonable to think the triple Qs may be able to have a daily range of 2.93%. Why? Because that would be a move of over 3 times the 20-day ADR percentage. So again, this is how you're trying to improve the chances that you can free roll, improve your worst case scenario, and take the risk out of the trade. And then you're there risk free by having a tighter initial stop loss relative to the 20-day ADR percentage. That's applicable whether it's an ORB, whether it's an Immorello, shakeout demand tail, gap down reverse bar, or a trigger bar. So that's why thinking about, okay, quarter, third, half, initial risk relative to 20-day ADR percentage, certainly for more so Immorellos and opening range breakouts, which are more of a tactical entry method, I'd say is effective. Then in terms of the optimization of profits, okay, so then you can, if you want to sell part there, sell half there, you can. For me, while a stock is displaying intraday relative strength, I try and hold it along the 5-minute 6 EMA. So if you take a look in this period in here, so now we're on to the fourth part, optimization of profits plus a little bit of risk mitigation, okay? In this period here, so let's say this is, what's going to be an easy kind of time? Okay, 10 a.m. to, let's go 10 a.m. to 11 a.m. Okay, I'm just going to highlight this hour. Yeah, an hour, nice and easy. So PLTR goes sideways, and you may go, well, PLTR is not acting very well, is it? Well, if you look at what happens between 10 a.m. and 11 a.m. for the triple Qs, zoom that in like that. Okay, if we line these up a little bit better, what you can then see is PLTR is kind of going sideways here. It's not up yet, it's 20-day ADR percentage. Okay, it's gone up around about 3%. There's maybe another 1.25% upside here, which is reasonable to expect. However, we can now start to see that the triple Q is coming under pressure. Triple Q's intraday has entered a downtrend. Lower low, lower high, lower low, lower high, lower low for me. So PLTR here is trying to hold up, but the algorithms just aren't letting it. It's now swimming against the proverbial algo tide. It's going to be harder for it. Make sense? So PLTR is not doing much wrong here. It's actually continuing to display intraday relative strength. It's just the indexes are not conducive at the minute to allowing PLTR go up. It's that proverbial basketball underneath water. So when the indexes start rolling, you also then want to think about the context here. Okay, let's take a look at the daily chart. Well, what do we think here for the triple Qs? Yesterday, kind of gap up doji here. Let's try to break the high, but it's now forming this little supply shoot. You can start bringing in seasonality. Last week of September tends to be pretty tricky. Okay, so I would not be surprised if triple Qs pull back down to their 10-day EMA next week. So that's likely to put some pressure on PLTR. So my views on the index, it's not like the index is here and just done a gap down reverse bar after 50-day. Okay, the index is being here compared to here, very, very different from a contextual standpoint if you're thinking about the wider market environment. Okay, when we're down here, and I think, oh, the index, look at this, big gap down reverse bar, may actually want to go fill the gap the next day. This is really nice. Well, my views on how I manage PLTR is going to be different relative to here. And it's not necessarily that the stock is doing anything different. The stock can be displaying intraday relative strength down here from an ORB, and it can be doing it up here. But the wider context of the market environment is going to factor in, what do I want to do for this position to optimize profits? Do I just want to manage it as a day trade? If I do, then 5-minute RBs, I really like the 5-minute 6 EMA. My preferred trading kind of back-to-back closes below that when it starts to show intraday relative weakness as well, and the MACD tends to turn down. Or what I could do is start doing lower the bar approach, or potentially riding the 10-day EMA. But PLTR, low the day approach tends to be fairly effective on PLTR unless it goes on absolutely huge moves like that. But the kind of awareness of the market and where you think the market may go in coming sessions, are we up here? Are we down here? Can influence how you manage your trades in TMLs. It could be PLTR, Robinhood, this stock, this stock, this stock. It's kind of relevant, okay? But you just want to be aware of how the wider market environment can have that effect, because PLTR is strong today so far, but you can see the indexes going down is really going to hamper PLTR's upward progress so far. So if we go through a couple more, I'll be quicker through some of these, but I just really want to hammer home the point of opening range breakouts, what to look for. These are all from today. Okay, try and do recent ones, ideally from the day of the session, or maybe the prior day. Okay, so we've got the SPY. So we're now going to be looking at the SPY just as kind of a broad market index, just to compare the strength against. Okay, so if you take a look at IONQ, well, what do you see? It's the same thing that we were just talking about. Strong bar. So this is the bar to look for, and it's doing it relative to this. Take a look at QBT as well. It's doing this relative to the SPY doing this. See the difference? Now, this is where we can add a layer of complexity as well, and you can start looking for group theme confirmation as well. So group theme confirmation is, it's not just that stock. It's not just IONQ, the kind of large cap quantum computing stock, doing it and displaying relative strength versus the major index. What you have is you have QBT, and the other ones, Regatti, which is our GTI, QBTS, we're doing it as well. So you've got group theme confirmation there as well. So the strength of one is confirming the strength of the other. And when you start seeing this is where I really kind of start bumping up the score to go, this could be a really big day here for quantum stocks. So if you look at IONQ, opens, near the low of the bar, little shakeout demand tail, push, strong close. Relative to the SPY doing that. Intraday relative strength. So visually you can see what you want to see, I think, for an opening range breakout. Could be on the 1 minute chart, 2 minute chart, 5 minute, 15 minute, 30 minutes, but it's also displaying intraday relative strength while the SPY is doing that. QBT, textbook, open on the low, strong close, push, get. If we were to go and take a look here, just at the initial risk for, say, a QBT, one of the members, Aaron, caught this today. The initial risk, let's just keep the figures nice and round, is 2.5%, and let's just say the ADR is 7.5%. Okay, the initial risk is a third versus the 20-day ADR percentage. If we say 2.5 versus 7.5. Now, what are we talking about? A quarter to a half can be a real sweet spot. But then we want to know, okay, when a stock then goes up, like QBT, when it then powers up like this, and it goes up so far 24%, it's actually more, 26% from down here, 27%. Call it 28% off an ADR of what? It goes up 4 times its 20-day ADR percent. What did it visually look like? What did it do? What did the other stocks in the group do? And then I'm not like a obsess about volume on an ORB. I don't think you need it, because look, the big volume comes through afterwards. See, look at the volume there compared to the volume here. There wasn't huge volume right here. There was high relative volume, but the huge volume started coming through afterwards. So this is then important to know that you don't always need absolutely mega volume coming through, because actually if you have the absolute mega volume, what that can often mean is the stock then gets too wide on, say, that opening five-minute candlestick. So then the initial risk is all out of whack. Then your initial stop is, say, 8% versus an ADR of nearly 8%. It doesn't really make sense. The stock may have run its course for that day. So here, this is absolutely textbook. And then you also want to understand, okay, when a stock goes on a big move for that day, the 5-minute 6 EMA, as I was talking about, which is the orange line that you see here, note how it encapsulates the entirety of the move, starts closing below, the MACD turns. So far, that's all she wrote. Now, these trades, they kind of come around every day, but are you always going to be able to get in it every day? Of course not, right? Because you may go for this stock instead of this stock. You may go for that stock instead of that stock. But the point is, when you get that stock and you get in that trade, these are the ones that really move the needle. So then you've got to be able to nail that. So as QBT is doing this intraday, look at what the SPY is doing. What is QBT telling you? It's continuing to tell you, I'm strong, I'm strong, I'm strong, I'm strong, I'm strong. As Barbara said, there's no need to sell a rising stock. So these are the ones that you then want to absolutely nail. Actually, NNE and Oglo from today. And just note the 5-minute 6 EMA as well, how effective it is. Clear this up a second. So Oglo, NNE, again, you're getting the group theme confirmation. So if we just really quickly work through the identification, controlling risk mitigation, optimization, and profits, look at the first 5-minute candlestick. Take that up, so look at the first 5-minute candlestick. The ORB is there, the initial stop is there. The ORB is there. The initial stop is obviously low of day, low of day. So they are forming this candlestick relative to the SPY doing this. So you're getting the group theme confirmation as well. Open on the low of the bar. So again, identification-wise, open on the low of the bar, strong close. And NNE is doing that relative to the SPY, and it's got Oglo confirming its strength, being its big brother. Oglo is the big brother to NNE. SMR doing the same thing as well. ACT is positive. ACT is negative for the SPY. And then we want to know, okay, when the stock goes on a big move, so if you take a look at Oglo, okay, let's call it 2 times, 2.2 times its 20-day ADR percentage. It's gone up 18% from low day to the higher day. And again, I'm not saying you're going to top ticket. You're not going to buy the absolute low. You're not going to sell the absolute top. The point I'm trying to get across here is think about what you keep seeing and build a system around that. So Oglo, 18%. Note how this 5-minute 6 EMA has encapsulated it. So yes, it closes below here, but there's no back-to-back close, okay? You have a close below here at 1040, but then note the quickness of the reversal. And at 1040, I'm just going to highlight it. This bar here is 1040. This bar here is 1040 for the SPY. Look at this big ugly candlestick on the 5-minute chart for the SPY. So the SPY does that and breaks down to new low of day, essentially. Here at 1040, Oglo only does that. Similar story, 1040 for NNE. They are still showing you relative strength. Yes, they have a red candlestick and they break to the downside. Look how the volume dries up. Look how the volume dries up. The volume is declining, I should say. When the SPY does that and breaks new session lows. Here, they warrant. Let me just see if they can recover here. What do you notice? Turn around, start to recover next bar. We'll shake out demand tail, start to recover. When you start to get here, ugly bar, 11 o'clock. Let me then just clear this up for the SPY. So then what you see with Oglo, and again, this is in some weed stuff. What you see with Ockler, 11 o'clock, big kind of change of character there as it just tried to make new high of day. So it tries to make new high of day, can't, turns around like that, a little bit kind of intraday double toppy, plus it's up over two times its 20-day ADR percentage, 11 o'clock. The SPY does this, tries to rally, supply shoot, turns around again. Strong stocks, especially when they're up over their 20-day ADR percentage and the indexes are doing this, will struggle. Back-to-back closes, out. Back-to-back closes, out. Show you with GDX. This is where you can then look at the group theme ETF. And we've got Newmont, one of the big boys of the precious metal miner. So what do you see with GDX today? So GDX, the 20-day ADR is 2.29%. If we were to just take a reading, low of the day to the current high of day, GDX, let's just keep the numbers nice and round. I'll just push this up a little bit. GDX is up, let's say 4%, or the daily range is 4%, and let's say the ADR is 2%. Okay, so it's just nice and round numbers. Okay, I appreciate that is 2.29%, not 2%, but it's just for the purpose of trying to get this message across. So GDX is essentially up 2 times its 20-day ADR percentage in terms of the daily range. Well, what do you see? Look at the opening 5-minute candlestick. What does it look like? Opens on the lower of the bar, closes on the higher of the bar. This is as textbook could be. What does that tell you? And the market is just absolutely dominated by algorithms. So when you see this, it's a real nod and a wink. So when you see this here, look, opens on the lower of the bar, closes on the higher of the bar. GDX opened and the algos just went with the sound effect straight in. And then they were just buying, closes on the higher of the bar. When the SPY is doing this. So then keep in mind the context. Okay, GDX is doing this, open on the low, really strong close. The algos are absolutely piling into this thing. High relative volume coming through as well. Well, the SPY is doing that. So not only are you visually getting this candlestick, it's doing it relative to the SPY doing that. Mental representations. Okay, gold miners could have a really big day because not only does the candlestick look like that, it's doing it relative to the SPY doing that. Again, this is what you tend to see. It's a game of probabilities, not certainties. But when stocks, ETFs go on a big day, this is what they tend to do. So again, if you can watch multiple stocks, ETFs as well, in this case with GDX, and then you see this behavior, and you open yourself up to those opportunities, then you're trying to go, okay, where is the relative strength? Where are the algos going to say? Where could the A plus opportunities be? And we're specifically talking here, obviously, about opening range breakouts, right? And then what do you see with Newmont? Okay, opens here, little shake out demand tail, strong close, there it is. Newmont up, call it 4%, again, nearly 2 times 20-day ADR percentage. Note with GDX as well, how it's just all ridden this 5-minute 6 EMA. Yes, you have a close below, but look, there's that 1040 candlestick that we were talking about. Look, 1040. 1040. So again, it's the context. If I could draw a straight line, that would help. Look at this bar here. Same 1040 bar that we were just talking about. SPY breaking down essentially to new lows, goes out on the low of that bar. GDX only did that. Yes, it closes below the 5-minute 6 EMA, but this one where you just watch it and it's still strong. It may just turn around and it immediately turns back around. Look how the volume just right. Look, there's no volume on that down move either. Look at the persistently high volume in here relative to that. Couple more. 2 South American miners. South African miners, sorry. GFI, AU. Same thing. Again, group theme confirmation as well. So the South African miners today, GFI, look at that bar. AU, look at that bar. And then the ADRs on these, decent. Just over 3%. So then if we were to take a reading here with GFI, GFI is up 2 times. Let's say 2 times its 20-day ADR percentage. From low of the day to the high of the day. AU, not quite 2 times. So we want to know, okay, when GDX, or when GFI in this instance, goes up 2 times its 20-day ADR percentage and stays above the 5-minute 6 EMA so far for the entirety of that trend, what does it do? What does it look like? What are the other gold miners doing that we were just looking at with GDX and Newmont? What does GFI itself look like? What does Anglo Gold Ashanti, the other South African miner, look like? What do they look like? What do they do? What are they doing in relation to the SPY? Remember, this is the first 5-minute candlestick for today of the SPY. Open on the low, close on the high. Then if you go and take a look at a risk reading here, okay, through the high stop underneath the low, initial stop loss, call it 1.4% versus an ADR of, let's just say 3%. Again, it's in that a quarter to a half range. Again, really then helps with the free roll and the risk mitigation side of things. Go and do one more. two more precious metal miners from today, Barrick Gold and Kinross Gold. So again, we know what the first 5-minute candlestick looks like for the SPY today. First 5-minute candlestick looks like this. Opens on the high, goes out near the low, ugly bar for the SPY. Contrast that to Barrick Gold. Remember what I was saying about open on the low of the bar, close on the high of the bar. So Barrick Gold, again, one of the bigger boys of the group. Maybe it's the highest market cap of the group now. It's up there with Newmont probably and Agnico. They're usually the top three. Open on the low of the bar, close on the high of the bar. This is absolutely textbook. And it's doing it relative to the SPY doing this. Now, if we take a look at Barrick, from the low of the day to the high of the day, it's currently up 8%. Let's just keep the numbers really, really easy, okay? Let's say the ADR is 2%, starts with a 2, right? And the current range from the low of the day to the high day is 8. So let's say it's up 4 times its 20-day ADR percentage. What does Barrick Gold do? Barrick Mining now. What does it do when it goes up 4 times its 20-day ADR percentage? What does it look like? How does it move intraday? These are the questions to then find out and study. So what do we see? Well, it opens on the low of that bar, literally on the low. Pull this across. Opens on the low of the 5-minute candlestick and closes right on the high. This opening on the low is really important. Remember what we were going through with QBT? Clean this chart up. So this makes it even better in my view, because they're just buy orders, just take out sell orders. They don't care. Market opens, the stock just goes. Look at QBT. So again, this is then how you start kind of differentiating between what's a C setup, what's a B, what's an A, what's an A plus, what's an A plus plus plus. Well, if we take a look at QBT, note that it's the only one, along with Barrick that I've shown you and UMAC, but let's just say with QBT and Barrick, that opened on the low of that 5-minute bar. The opening print of the day is the low of the day. You can see it on the daily chart. And it's gone up circa 4 times its 20-day ADR percentage, which call it 28 versus 7%. About 4 times. Well, that's interesting. So it opens on the low of that 5-minute candlestick, pushes and goes. So it opens on the low of the day and just pushes and goes. Well, that's interesting because this one's gone up nearly 4 times its 20-day ADR percentage, and it did that. Barrick Gold did that as well. Opened effectively right at the low and just push and goes. And this has gone up circa 4 times its 20-day ADR percentage. So this is how you then start differentiating between that's a really good setup and that's a really, really, really good setup. Make sense? So if you're looking at the different precious metal miners, you can think, well, okay, Kinross Gold, yeah, it's strong, isn't it? But it's got this shakeout demand tail. So there was momentary weakness for the stock. Okay, it opens here, trades down, turns around and goes. Barrick doesn't do that. Which one's telling you it's stronger? Barrick just goes, out I go. Don't care. Sell orders, what sell orders? Like that, with the sound effect. Now, if you look at the continued strength of Barrick, so remember here, this is kind of that 1040, 1045 time. One close below the 5-minute 6 EMA. Look how the volume dries up. And then it turns around. So just because a stock closes below the 5-minute 6 EMA, I don't necessarily just sell it there. Okay, I'm watching. If it then starts breaking down intraday relative weight, gone. But look how quickly it then turns around. Similar here with Kinross. Okay, closes below it, but it's still there. Up it goes again. But then take a look at what Barrick is doing. This is real time as we're filming this. Look at what Barrick is doing. Look at what the SPY is doing. Is Barrick saying hold me or sell me? Hold me. I am ridiculously strong. I want to go higher. So I think in this market environment, and likely to continue with the kind of AI as well, that this here is just going to continue. But this is where the game is on a daily basis. If you can do this, I think the world is your oyster, literally. Let me bring in a couple of you. Thomas is happy to join in. Juan's happy to join in as well.